Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, June 9th. Hey, the week's almost over. And the stock market's getting some good news today. My opinion, kind of overreacting, but it's basically they're kind of rejoicing a little bit on the trade balance. The deficit's kind of getting cut a little bit further, kind of unexpectedly. So they were kind of expecting about negative $48 billion deficit, and it actually dropped to 43.7 billion. So pretty good change. So that's kind of good news. But that's not usually a market mover in this case, especially when you have jobless claims that were upwards, still above the 400,000 threshold. So we're at 427 new people applying for unemployment. So that's still not good news for economic wise. The reason why the trade balance is that they think maybe it might improve our GDP, but to be honest with you, looking at the numbers with the factory orders, we're really not having much on the factory side, which has been kind of what's been doing well for us. And then on top of it, I'm on the real estate side of things, and things are kind of slow, at least in our market over here in Southern California, in the South Bay area, where I'm located. Things are pretty slow. I have some high producer loan real estate agents, even they're saying this is some of their worst beginnings here. So, and then even wholesale inventory is another item that's not big deal, but its wholesale inventory is up 0.8%. So these are all kind of, what's kind of the economic news releases for today. But the stock market, again, is doing well. And another headline I saw today was kind of interesting. The Obama administration put a halt on some of the big three banks because of their neglect on making home affordable for the processing of so to prevent foreclosures. And that's like Bank of America, Wells Fargo, and Chase. So all three of them have been criticized, and they're going to stop payments to them until they can get until they feel that their act is together. So let's go ahead and take a look to see what the bond market is doing and where the interest rates are moving. Okay. So here's the bond market as we were talking about. We had a nice little rally going upwards yesterday. And today it's kind of a weird news. It looks like, as we kind of mentioned previously, the stock market is kind of, my opinion, kind of overreacting, and basically that money is coming out of the bond market. So as you can see, it's kind of dropping downwards, and we're right now at negative 31 basis points. So interest rates are kind of worsening right now because that money is going into the stock market. As you can see, stock market, as we mentioned earlier, stock market's actually gone up a bit, and all that's due to the news release from the trade deficit. So typically it doesn't get that much reference, and especially when you have the initial jobless claims still well over 400,000 each week. That news, I think, would trump. That's usually a little bit more bond friendly and less economic friendly for stock market. So I think later in the half, my gut feeling tells me this is going to pull back later in the day, and then it'll probably come back to maybe about even where we're at here, and then probably go sideways for a few days and probably work our way upwards. But yeah, I think this is kind of overreaction due to the trade deficit that pulled back and narrowed a bit last month. So, which is good news, but not to the point where they're overreacting like this. All right, folks, you guys have a good day. And folks, I'm also a loan officer. If you're looking for a mortgage in the state of California, I can also help assist you. You can check out my other websites here at obviously at Mike's Daily Market Report and MikeBjork.com, even CaliforniaMortgageTips.com and the Mike's Homebuyer University.com. I have some great resources there. But feel free to give me a call at 310-694-3544. I can do refinances, and I also do purchases, so I can help you get pre-approved to buy that next home here. So thank you, and keep me in mind.